Hey there guys, how's it going? Chillingworth here, hope you are well. Thank you for checking out this video. Today I want to share with you some data around my end of day trading. So this is trading daily charts and focusing purely at the moment just trading FTSE stocks, and this is FTSE 100, 250, small cap, and I don't think we've got any fledgling stocks in the watch list right now. And AIM stocks as well, FTSE AIM, Alternative Investment Market. And the results so far this year have been fantastic with this approach, and I wanted to share with you some of those results just because literally on the Facebook group yesterday someone was saying how October has been a particularly difficult month for them. They've seen 50% of their gains drop away over the course of I think they said September and October. And that is, and then obviously a barrage of people then coming on saying, yep, same with me. And obviously that's expected. You know, we'll trade in the same stock market. If you're focusing purely on the FTSE stocks, and the FTSE or the UK markets take a hit or don't see much growth, then you're gonna suffer from that. You're going to be impacted on that. There's only so much. I mean, you can't make things happen. You know, it's kind of like the surfer in the ocean. You get what waves you're given, basically. And it's the same with the stock market. You'll get what you're given, essentially. And especially on a daily approach with a buy and hold strategy. But the results I want to show you today are purely based on the 26 companies or stocks, FTSE stocks, that are in the clean watch list that I have identified through my unique criteria of how to identify stocks that I want to invest in. I have a unique criteria that I've built myself that scrutinizes these companies. Takes about 2 or 3 hours per company, and it's allowed me to whittle down which FTSE stocks have the best chance out of everything else to go up in value over the next 1 to 5 years. Plus 5 years, so 10-20 years we would absolutely expect them to still be up there. And I wanted to share with you the results of this system, because I'm seeing people who are struggling, that they've made big losses in October. They've lost 50% of their accounts, some of them, and I want to show people that you don't necessarily need to be trading intraday to make decent returns on a yearly basis. And so what I've done here, I'm just going to drag this across now. This is, and this looks awful, but let me explain it. Let me guide you through it. Okay, so right now this looks like an absolute mishmash of numbers, but let me guide you through this and show you. So essentially what we've got here, each row represents a different one of the 26 clean watch list stocks that are in the watch list that I've been identified through my criteria. We've gone through about 120 different companies now so far. The process is ongoing, and we've discovered 26 in there at the moment that meet the criteria that I'm looking for in companies. And this isn't just raw numbers. You can't just get this information from a website that give you the fundamental data or the financial summaries. This is going deep into those companies. This is looking at where is the money coming from. Is it part of their recurring business, or is this part of selling off one-off assets that shouldn't count because they can't rely on that every year? Where are they investing the profits that they're making? Are they spending putting into dividends? Are they buying assets? If they're buying assets for the company, i.e. property, plant, equipment, that sort of thing, or intangible assets, what's the return that they're getting from those assets? Is this the right place for them to be investing the money, or should they be investing it in buying back their own shares, or pumping it into a reserve pot to sit on a reserve where they can then acquire other businesses? And it's crunching all that information and working out who are the best companies out there on the FTSE, and I found 26 of them so far. And this is a breakdown of the 26 companies. And essentially we've got the date that they would have been added onto the clean watch list based on the factual financial information. There's no opinion here whatsoever. So I don't have any personal affiliation or affection for any of these companies at all. This is purely mechanical. It's do they pass the grade or not. It's a very mechanical approach. There's no maybes, there's no grey areas. They either do make it or they don't. And there's a very kind of solid line there that they have to cross. And these are the companies that made it. and we've got their entry prices as to when they were added to the watch list. But what I wanted to show you guys was performance for this year, 2019 so far. So what you can see here is we've got it broken down by the months so far in 2019. We're just about to hit November, which is why November's in blue right now. We've got a day to wait. Basically, the end of today's trade-in, we'll put the prices in for that, and it will just update it slightly. But we're pretty much there. So we've got it broken down, but the columns are by month. And then what you've got here are all the different stocks, 26 different stocks, and what was the price of that stock on the first day of trading for that particular month. So I think it's like the 2nd of January, the 1st of February, the 3rd of March, I think it's the 2nd of April. The first trading day of that month is what we've used to kind of pivot or point to the price that stock was currently trading at that time. And as you can see, the prices go up and down, they fluctuate as you would expect. And what I've also therefore done is I've then broken down the percentage of increase or decrease in the value just for that month. So it takes the previous month's value and works out, are we up, are we down, and by what percentage. So for example, if we look at this first company here, they were trading at £6.03 on the 1st of January, and they were trading at £6.29 on the 2nd of February, which is a 4% increase. Right, and so what that does is that, and you can see here that the beginning of the year was fantastic. So we're assuming here basically that you would have an equal holding on all 26 companies. So you'd split your money up across the 26 companies and hold an equal value of shares basically in those companies, depending on obviously the cost, and that would dictate how many shares you can afford. But in terms of your financial value, you'd split that up 26 ways essentially, or divide it up by 26. And so this data shows you how the system performed across all these different stocks on each month. In terms of, did they go up in value? Did the portfolio go up? Did it go down in value? That sort of thing. And I think it's fascinating, the data that we can see here. And as you can see, the beginning of the year was fantastic. And as we hit sort of July, August, coming into October, things haven't been quite so good. And you can see that with the amount of red and the pattern, and the fact that we see more red on the right-hand side of this little chart than we do on the left-hand side, which was predominantly green because all the stocks were doing well at the first quarter of the year. And in this quarter of the year, or coming into Q4, we've not done so well. Q3 has not been good for this portfolio in terms of it's seen some losses. And I wanted to share with you this kind of warts and all approach of what to expect from this approach more than anything. You know, people who are trading intraday, but they're struggling to make it work, and they wish they could trade just daily, but it's too slow for them. Well, actually, you can get some decent results from trading daily charts, and I just want to show you this. So we've picked these 26 companies because they fit the watch list. They've got the best chance of going up in value over the course of time. So something that I try and remind people when I do this sort of stuff is, look, you can't just look at 1 month's worth of data to see whether or not this works or not. When I turn around to my members and I say, right guys, here's a stock for the watch list that needs to be in the watch list, you need to be on this, and then it's up to them to get in and get out based on their own system. But what I'm doing there is I'm essentially saying, right, this is a company that's likely to go up over the next 1 to 5 years, not the next 3 weeks. And so, you know, I try to make it very clear to people that if you give it 3 weeks, if you buy this particular company or buy shares in this company, and in 3 weeks' time it's down in value, it's not something to get worked up about, because we're looking at a much longer term view to this, right? But this gives you an insight into what's occurred over 2019 so far. And I think it's a very good and very useful insight into it. So as you can see, this first company, total returns so far for this year is 19%. So from the 1st of January to present day, so if we'd bought an equal amount of shares in this company, in all these 26 companies, and started trading on the 1st of January, I think it works out the 3rd of January as the actual trading day, and bought them at these prices, this is the price they would be at, or are at today. And this particular company is up 19%, this one's 39%, then we've got one that's down 30% right now for 2019. We've got another one up 26%, then down 9%, then up 36%, and you can see it's broken down all of the performance of each individual stock over the course of 2019 in terms of where is the value now in comparison to the 1st of January. And what I found very interesting here is that obviously you can see the colors here to indicate that Q3, for example, so July, August and September have not been so good, and October's also been relatively poor for us. In terms of this portfolio, and the beginning of the year was fantastic. But down here, what I've done is I've broken down the actual rise and fall performance of the entire portfolio. Now, the portfolio for 2019 is up 22% as of today. So from the 1st of January 2019 to present day, which is the 31st of October 2019, we're up 22% on our investment. And again, that's assuming that you've split it 26 ways across the 26 different companies with equal value in each holding. And as you can see, in January we had a 10% increase in the account. Then February we saw a 3% increase, a further 2% increase in March, a further 7% in April. We didn't see much happen in May at all. Then we saw a 3% increase in June. So the first Q1, Q2 were fantastic. Absolutely fantastic for the system. It just kept going up and up in value. Unfortunately, July we went down 1%, August we went down 2%, September we wrote that off by going back up 2%, and October we've seen a 1% drop. What I find fascinating about that is because we had a couple of stocks, we had quite a few stocks in October that they lost a lot of value. This one here, stock number 11, lost 9%. This one lost 9%. This one lost 10%. There was a 14% drop in value on this particular company, which, if we look at that, would have been October 1st of October 2019. It was trading at £19.64, and as of today that's down to £16.81 on the 31st of October. So we've had a 14% drop on this particular company, which is, pretty hardcore. It's quite a drop, and down 14%. However, we've got stocks in this portfolio that are up 17%, and when you actually balance it all out, the whole portfolio is only down 1%. So I wanted to show you this because, yes, as you can see, October 2019 has had a relatively bumpy ride across many of the stocks within this 26 stock portfolio. But as you can see, the portfolio itself altogether, because of the stocks that have done well over that period of time as well, has only seen a 1% drop in October 2019. Now this is, you compare this against some of the results that many traders have been having, people who have been emailing me, putting posts in the Facebook group, the Clean Trader, where they've lost 50% of their account in October. Yes, we can absolutely see why that might be if they're trading the wrong stocks. Now what I've also done on here as well is I've compared the results of the entire portfolio here against the performance of the index. The best place to kind of, the right index to compare this against really would be the FTSE 100, I guess. And so what I've done is I've taken the same approach and I've looked at the price of the FTSE on a month-by-month basis using the same trading date, and then plotted that in across the year of 2019, and then we looked at the overall increase. So overall the FTSE so far this year is up about 8%. It's returned about 8% basically, from a 67.28 at the 1st of January to 72.67 right now. And this is, you can see the journey that it's been on throughout that period. What I might do as well actually is I'm just going to conditionally format this so you can see the color coordination as well on this. There we go. And you can see here the comparison of the two approaches. So when the FTSE went up in value by 4% in January 2019, the portfolio went up by 10%. So by cherry picking some of the stocks out of the FTSE 100, and obviously we do make this up with a few 250 and small cap, and I think 1 or 2 AIM shares in there to make up the overall portfolio. But our portfolio, by cherry picking just these 26 companies, we managed to get 10% return when the FTSE overall index only went up by 4%. In February, we beat it by 1% again. In March, the FTSE beat us by 1%, but then in April, the portfolio went up 7% when the FTSE only went up 2%. in May, when the portfolio didn't really increase in any value at all, the FTSE actually saw a loss of 3%. And you can see here overall the journey and the comparison between the 26 trade portfolio or 26 stock portfolio and the FTSE 100 index. And you can see here we're up 22% so far in 2019 against an index that's only up 8%. And so this is really fascinating. And for me, I love this sort of stuff. I love numbers. I love crunching the data because it's factual. There's no opinion here. This is purely mechanical, factual information, factual data that tells you exactly what you need to know. So here we are with a system that, generally speaking, makes about 30% return a year. Over the past, where do we go back to? 2014. So over the last 5 years, I've run some back testing on all of this information, all of this data, and the 26 companies here. And from 2014 to 2019, it's been making, on average, about 30% return a year. 2019, not been quite so good a year, but we're still up 22%. I'm still happy with 22% return for this particular portfolio. I think it's great. And it's beaten the index. It beats many other funds that are out there right now. You know, the 22% return in 2019 beats many of the index funds that are out there, and hedge funds and other financial funds that are available out there to people. They haven't achieved 22% for the year. So I'm really happy with the results. But what it shows is that this is a simple buy and hold approach. So this is simply you buy and hold these companies because we're expecting them to go up in value, and that's all we really care about. We're not looking for necessarily the best time to get in, the best time to get out, although you can apply that system to this approach. If you've got a mechanical systematic trading system, then you can absolutely apply that to these stocks that may improve or may reduce the results that you get from it. It really depends. You'd have to do some back testing on it. This, however, is just buy and hold, and it's so simple, right? I mean, it's buy and hold. So as long as you've bought an equal value in all of these shares, you just buy and then you just relax. There's nothing to do from that point. You just hold it. And you hold them, and you hold them, and you hold them. And then when you've got more to invest, you split that up 26 ways. Now, that's not the right way to do it. You wouldn't pay 26 different commissions. You'd have to pump it into different amounts, and it's all about asset allocation as a whole. You can read up loads on asset allocation and how to put the right amount of value into each of your different positions to balance it out. But essentially, you would just buy and hold these stocks, and you would be up 22% so far this year. That's really interesting for me when I see and I know and I meet many traders and investors out there who have not achieved a 22% return so far this year. They are nowhere near that. In fact, many of them have lost money in 2019, and all they would have needed to do would be to buy an equal holding in 26 of these companies, and they would be up 22%. It shows me that sometimes people are trying too hard. Sometimes people are applying too much to what they're doing to try and make as much profit as they can, yet simply buying an equal position in 26 of these companies over 2019 would see you up right now, up 22%. And I'd ask you, how would you feel about being up 22% right now for 2019? How would that feel as opposed to what you have achieved this year? Because chances are your system is far more complicated and involved than this when you've just got to buy and hold these stocks. I would also add as well, this doesn't take into account dividends. So if you think over the course of 2019, all the dividends that you would have achieved and earned from owning these companies, these 26 different companies, the majority of which pay, I think, two dividends a year, most of them. Obviously, that's going to increase the percentage of return that you get, because you can then, that's going to get paid straight into your brokerage account, and you can use that to buy more shares the following year and invest more and spread it across the different 26 companies. So that's all I really wanted to share with you. Just keep it really simple. I've just kept it really simple for you. I just wanted to share with you the ups and downs of 2019 so far, how the portfolio has performed. Yes, we have seen some significant drops in August, September and October across some of the stocks in the clean watch list, and I can totally relate to some traders out there that have lost over 50% of their account in the last couple of months. But it's because you're trading the wrong stocks. It's because you don't have other stocks in here that have been cherry-picked and hand-picked by myself via my clean trading watch list to especially because they are geared and set up to grow in value. There's a reason why they've been picked, because they've passed a very strict and strenuous test to make it into the watch list. Only 26 companies so far from 120 companies have made it, and I expect that number won't grow much more now, despite the analysis we're going to run over the rest of 2019 and into 2020. But I'm going to wrap it up now. I hope it's been useful. I hope it's been a good insight into what can be achieved and essentially what we're doing. If you don't have the right stocks in your portfolio, then yeah, you probably will have seen a bit of a slump in August, September, and October. I mean, in July we had one trade, one company that went down 26%. We had another company in August that went down 21% in value, in share price value. In September there was a company that went down 23%. But because the portfolio itself is strong, there are other stocks in there to shore it up, to make sure that we don't, rely on or suffer from just one company that has some sort of a drop. We've spread the risk, and by doing that, we're up 22% in 2019. And I want to ask you, where are you right now in 2019 in terms of your return? Because if you're working hard, if you're, running all this analysis, if you're trading a very complicated system and you haven't, or you're trading intraday, let's say, and you haven't made 22% so far in 2019, then maybe you should consider an approach like this where you simply buy and hold. But anyway, I'm waffling. I want to wrap it up now. Hope it's been a useful video. If you want to get in touch, if you want to ask any questions about any of this at all, please feel free. You can ask me in the comments at the bottom of the video. I generally always get back to people. You can email me at chris@thecleantrader.com. That's chris@thecleantrader.com, or you can hit me up on Facebook. Just go to Facebook, type in Chris Chillingworth. I am on there. I use it every day, and there's a Facebook grouve called The Clean Trader if you're not a part of that already as well, where you can come in and chat to me and about 1,200 other traders that have all got a very similar mindset towards trading. Very healthy group, very positive group. But otherwise, thanks for listening, thanks for watching, and I'll see you guys soon. Cheers.